Welcome back. It's time for business, and I'm joined by our business editor, Owen Fairclough. Hello.
Hello, Claire.
Owen, now we're just a day away from another all-important EU summit, and the dramatic soundbites are already out.
And that's how you know that it's an important summit, Claire, when the language starts to be dialed up just a day or two before this get-together. How about this from Angela Merkel, the German Chancellor? There will be no shared liability as long as I live, or, according to other reports, no pooling of debt as long as I live, whichever way you cut it. She is saying German taxpayers will not be liable for the sins of countries like Greece or Portugal or any other southern European country that's currently in trouble. This is all in response to what is nothing short of a revolutionary proposal to basically federalise Europe and have what you might call a United States of Europe. This is the European Council, which is leading this summit on Thursday, basically setting out what it calls a roadmap for a transformation of the way that Europe is run. What that essentially means is that Brussels would become all-powerful. We might have some sort of treasury. You might even have a building dedicated to running Europe's finances. Now, that would mean things like a banking union, mutualising debt, all to be controlled by Brussels. And that would pretty much obviate the need to have these summits every month, it seems, where we get these expectations, we get these squabbles and these Eurozone leaders fighting about who pays what. It would all be centralised. Mario Monti, the Italian Prime Minister, has also laid down something of his own gauntlet. He wants an end to these piecemeal summits where the market's, first of all, optimistic and then pessimistic. He said he's even prepared to stay there for the whole weekend if need be and sweat it out so that some sort of meaningful deal can be achieved. Here's the Italian Prime Minister, Mario Monti.
Per quanto mi riguarda, sono pronto a restare.
As far as I'm concerned, I am ready to go beyond the scheduled limit of the European Council meeting and the European Summit, and to work through Sunday evening if necessary, so that when the markets open on Monday, we can deliver a robust growth package and a vision for the future of integration that will satisfy the markets.
So, Owen, we might be in for another red-eye summit that goes into the wee hours of the morning.
Yeah, if memory serves me correctly, I think the last one was in December when you had people like Nicolas Sarkozy, the then French president, staggering out of these all-night negotiations to seal the deal on what was then putting together that bailout fund. If you think that bailout fund seems trifling compared to what they're proposing now, and yet it took these leaders around 2 years to get this bailout fund up and running and get the kind of numbers that were meaningful. The problem is you've got Europe divided once again between people like Monti, who want something of a quick fix, something that would satisfy the markets once and for all, and yet leaders like Angela Merkel on the other side who say, let's have these countries like Greece get their financial houses in order, get those budget deficits down to acceptable limits, and then we'll talk about things like Eurobonds. Then we'll talk about things like banking unions. So you can see the division there between these leaders who want a bit of sticking plaster, it would seem, and those leaders who want that long-term vision to take shape.
So how are the markets looking in the lead up to this summit?
Yeah, there's been a bit of a bounce back. Most of the markets have taken a real hammering, of course, with that banking crisis in Spain. We had another bank in Italy yesterday needing €2 billion from the Italian government. With all that in mind, though, the European markets seem to be a little bit optimistic heading into this summit. You can see they're all up around about 1/3%. On the Asian markets as well, the Hang Seng had the best of the day's trading, up around 1%, and the Nikkei not too far behind, around 0.7% up.
Next, the breakup of one of the world's biggest empires. Rupert Murdoch has always rejected any suggestions he should break up News Corp, but the UK phone hacking scandal has taken its toll on some of the newspapers that helped make him, and that's led to a change of heart. Caterina Vitosi has more.
The Wall Street Journal, The Sun and The Times. Just some of the titles in Rupert Murdoch's media stable. The Australian billionaire is a newspaper man at heart, but his first love is weighing heavy. Nearly 75% of News Corp's profits come from its TV networks and movie studios. Its publishing arm generated only €7 billion in revenue last year. On Tuesday, News Corp chiefs confirmed they're considering splitting the two divisions into separate businesses. The move would distance Murdoch's TV empire from the press one, which last summer became entrenched in a phone hacking scandal, leading to the end of Britain's best-selling newspaper.
I think it's a combination of the hacking scandal, how the publishing business has changed, because it's clearly changed over the last 5 years. And I think it's the influence of Chase Carey, who I think Rupert truly respects quite a bit. And Chase thinks this is the best thing for shareholders. And I think he's having an impact.
Chase Carey, News Corp's chief operating officer. He's the darling of the company's investors who've welcomed news of the potential divide. The company's shares had jumped by Tuesday's close. The split could also bode well for Murdoch's attempts to take majority control of B-Sky B, the UK's top pay TV network. His bid stalled following the press hacking scandal. Media regulators are currently deciding if News Corp is fit to hold a broadcaster's licence.
News Corp's board will be meeting later this Wednesday to thrash out those ideas. Let's get a little bit more of the day's company news for you now. One of the biggest mergers of recent times is under threat in a fresh shareholder rebellion. Commodities trader Glencore is trying to complete the $65 billion takeover of miner Xstrata, but the Qatari government, Xstrata's second largest shareholder, is demanding better terms for the deal. Qatar's support is vital if Xstrata is to win the backing of at least 75% of shareholders.
And Jersey should be ready to break away from the UK if its tax haven status is threatened. That's according to the Channel Islands Assistant Chief Minister, Sir Philip Balash. Jersey and Guernsey have been under fire as the UK government tries to stop wealthy investors dodging a range of taxes through legal loopholes. Now, raising the French minimum wage was President François Hollande's most populist pledge on the campaign trail. He's made good of it. It was his first piece of parliamentary business. The rise is modest, but still troubles those who think French employers need to trim their payrolls to compete on the international stage.
15 one-way Paris Underground tickets, 17 litres of milk from a supermarket, or 2 trips to the cinema. That's what France's lowest earners will now be able to afford extra each month. On Tuesday, the new socialist government raised the minimum wage by 2%. In the pocket, that's an extra €21.50. Still not enough for some.
€20 extra isn't much. Really, it should be €100 at least.
However, the government's confident that raising the minimum wage 0.6% above the rate of inflation is just enough to boost purchasing power without affecting employment.
It's enough for those that need it without destabilising our economy, especially small businesses and manufacturing.
Before he lost the presidential election, Nicolas Sarkozy had said he wanted to make France's labour markets more competitive, cutting payroll costs for business owners. But Hollande's decision will make France's minimum wage the 4th highest in Europe. Luxembourg is top, followed by the Netherlands. Germany doesn't have a minimum wage. Although millions of workers there got a 5% pay rise last month, Germany's labour costs are still cheaper than here in France. French employers' unions had been concerned that wage rises could increase unemployment, but even they've accepted the change.
We think the rise is a reasonable one. It was a pledge that the president and his team made and have honoured. So we will bow to that democratic decision.
A democratic decision that Hollande and his ministers believe can go hand in hand with getting the country's budget deficit under control.
All right, thanks very much, Owen, for that look at the day's business news. Thank you for watching France 24. Stay tuned. Stuart Norval will have the latest headlines coming right up.